Welcome back, everybody, to another market day. My name is Axel. I shall be your designated inquirer for today. And today is 9/22 of 2020. Now, there's a lot of stuff that happened, including Battery Day, and just take a look at the general market, which to me, the general market means the NASDAQ in terms of like where most of the action is at with regard to tech stocks. Okay, since the drop today, we went a little higher. It seems as though it could be that we only left partially this immediate downtrend. Okay, it's immediate downtrend. What kind of helped today was, I'm thinking, partially the anticipation of Battery Day. I'm thinking, okay, because if we take a look at what Tesla did, TSLA, basically from about the same point or a couple days ago when it should have, well, you know what, the rest of the market has been going up for the past couple days. So up until probably this point right here, actually, Tesla has been underperforming. How about that? How about that? Well, let's see here. I think it eked out a partial gain from what I remember. Here it eked out a partial gain, and here it did not. But it ended up opening lower, but maybe partially from other external economic factors. The rest of the market, though, did do better than Tesla. Okay, so that is a little curious. So for the past couple days, the market was able. It did go lower, but it was able to recover. And today it was able to actually gain some ground. Now, is that the end of it? Is this where this is gonna stop and we're just gonna continue on our merry way like this right here? And happy days ahead until the end of time? No. At least I don't think so. Okay. So how are we gonna, how's this played out? So let's make a quick line right here. We're gonna make a quick line right here. We're scratching at it right there. Okay, we're scratching at it. We're at the limit. The limit here approaches zero. Okay, this looks almost asymptotic. Okay, we can go up back to the point of control. Okay, basically through to the end of next week, and that'll be that. And we start a new month, and then we'll see where we go, because as soon as the new month starts, all bets are off. The market can decide to go in any which way direction it wants to go, where it could go lower, kind of like how at the start of this month it tried to eke out a little bit more of a gain, but considering how much it had ran up the previous month of August, it just more was not possible. Now, you can argue that at the beginning of next month, it could probably try and eke out a few more points into the negative and then turn right around and make its way back to the all-time highs. What would be stopping it from doing that? Well, we still have all the other major economic factors basically running against it. I like how there's all these people, all these pundits on CNBC that love to play up supposedly this improving economy when we have no more stimulus coming. Politically speaking, it's dead in the water. Without any more stimulus, we've heard it from the Fed here now, without so many words, him trying to warn us that without stimulus happening, that the economy takes a turn for the worse, right? Between here and when stimulus does arrive, and then thereafter, the economy might be okay, but in terms of how much we fall and how badly we fall in the interim between here and getting a stimulus will decide how long the pain will last to be able to recover from that recession and or the depression caused by the lack of action from Congress. And it's going to take that much more money for it to be an adequate stimulus, right? So if one thing is how far we can drop, okay? Another thing is how much is needed to spend to be able to recover. Third is probably a mixture of both. How long would it take to recover? Considering that the Fed has had to increase its calculation out multiple years at every juncture that we do not get stimulus. Basically, with every like couple weeks that we don't get stimulus, it seems like the Fed was coming out with a new meeting or Fed minutes or something like that, trying to explain, trying to give to us some rosy picture, and at the same time telling us that, well, we're going to be keeping rates for an extra year. But the fourth quarter looks fine, guys, and that we're only going to be dropping 3%. Only. But that's it. Only 30. 3. Only 3, not 30. 30 was the amount, 30 plus was the amount that we dropped in the second quarter. I still have a hard time believing that we're going to be getting to any sort of, assuming a loss. I'm pretty sure it's going to be more than 3%. Yeah. All right, so let's take a look at what happened with Tesla after hours, TSLA, okay? Because Tesla did come out with some amazing stuff. If you guys saw the presentation, okay? Considering where it's at right now, it's basically, if we move these around, it's gonna tell us. Right here, we are at 26.63% down, okay? 25% down, okay? Here, remember that we were at 42%, okay? So you can still go down quite a bit more to even match these lows, considering the letdown that was Battery Day, okay? And letdown, I'm using it as a relative term because it seems as though Elon Musk broke his streak of under promising and over delivering, okay? This time at the behest of some sports bettors that were betting on Tesla, hoping that it would be able to run up, told him do something about this. And when that happened, he basically did tweet that Battery Day was going to include some amazing things, which it did, but from a scientific and an engineering perspective. From an investor perspective, it was basically taking us back to pre this whole entire thing, right? This whole rally, pre this rally was basically the hard times, right? These were the hard times, okay? When, are we going to start making profit? Are we going to start? Nope. We're going to keep dumping all of the money that we have into reinvesting into the company to run for growth. Okay? That's what before this market run was, okay? All right? Within that run of all of this stuff, okay, pre-making profit, pre-making a car even, but at an insane clip of reinvestment, okay? At every point in turn, new developments were greeted with an increase in price, okay? And when they finally had a car, and not until after, okay, around 90 or so, when it got the consumer reports best car of the year, that's when it basically, oh, we've got something here that's unlike anything we've seen before. It's a new startup that could get car of the year, right? It's impressive. And it got it for 2 years running. Oh, that's quite the record. That's a contender along with, you know, all these other Fortune 500 major corporations that can produce cars at a nominal rate and consistently produce quality, okay? It's like, oh, the picture's changing. Huh, but you keep reinvesting all of the profits back into the company. Oh no! And like, again, like as soon as like those bouts kind of stop or whatnot, and we start to actually see the money trickle in, or what kind of money can be made, and like, ooh, money. Ooh, money. Like, ooh, improvements in manufacturing technology, etc., whatnot, while not investing too much money. Like, then it starts to creep up again, up until you have more, probably at each point in time, at each one of these dips, it was probably some news story about how there would be a large reinvestment into the company, like with producing a gigafactory, with like all these things, right? Like at every point in turn where Tesla basically comes out with a new thing, okay, short of this one right here, which was like short from this point right here, where we only had a stock split and we had this huge run up and then fall back from grace. Right here is kind of notable. Right here is important, an important event, okay? Because here we have the next phase, okay? It's like in the Avengers. We've cleared phase, like we're getting the group back together, or we're putting a group together. Oh no, there's internal strife. Oh no, we get the group back together. We've got to defeat this. There's this thing called Thanos, and he's gonna kill. You know, like at each point in time, Disney decided to basically launch these films in different phases. Okay, this is a different phase to Tesla. All right. They're basically going from a car company, which, you know, the second they started making superchargers and batteries and being able to bring in Solar City, they were going to become an auto and energy company, okay? And as soon as they merge with SpaceX, they're going to be an auto, energy, and interplanetary transportation company, okay? But apart from that, they're also now a telenetworking, okay, with their satellites that provide internet. They're gonna be a regular planetary transport company with the autos that they make. And considering that they were talking about today that the energy density of the batteries has reached a level, okay, has reached a level where the physics start to work out, where physically the battery can be used for production in maybe lightweight, small commercial planes, okay? That's super important, because the better the battery gets still, which there's always going to be room for improvement, it means that we can at one day start to electrify our airplane fleet to be able to move people, and that's going to be a huge improvement in the way we move people around the planet. But till that day comes, which is not yet, you better believe that Tesla's going to be the ones that are going to be at the forefront of that technology, because the ability to make an electric motor, they seem to have very little competition in being able to produce the best. So considering all of that, we still had today a dump, okay? We still had a dump today, okay? This dump was of, let's see how much was falling here, okay? It fell 12%, okay? From the high that it reached, from like, oh yay, it's here, it's finally here, and then, oh no, you're gonna be using money. Like, that's the drop that we saw. That was the drop that we saw. At every point in time where he was introducing something more spectacular, more amazing, etc., but it wasn't backed up with an exponential increase in cost reduction, etc. Just because it wasn't accompanied by an exponential decrease in costs or an exponential increase in profits, this happened, right? And because the people that were listening to his tweets were misappropriating his enthusiasm for scientific advancements and not necessarily investor-related advancements in terms of a company. Okay, Tim Cook, for as much as I don't like him, he's kind of almost the antithesis to an Elon Musk. For as much as I don't like him, investors love him because he does produce things that financial investors do like. But in terms of, from a scientific standpoint, Apple, in my point of view, has been at a standstill for like the last 10 years since Steve Jobs passed away. That's my humble opinion. But so because investors are never really going to get along with Elon Musk as a CEO in terms of how he goes and talks about his company, how the information that he decides to present, how he presents it, and all this other stuff, because he does not speak investor, he speaks science. We're going to get, events like today that are basically going to move the stock down, but it's going to provide an opportunity for everybody else to be able to jump in. How low it's going to go is now going to be probably more dependent on the rest of the market than Tesla by in and of itself. Okay, if it went up today, Tesla in and of itself might have been able to provide some sort of self-determination, but now it's going to be more subject to the goings on and the dealings of the rest of the market, including politics, the virus, everything, right? Everything is going to be more sensitive and subject to everything else, irrespective of what Tesla is doing as a company. Okay, so because of that, and people knew that, that's probably also why they decided to sell, because now they know that the rest of the market, even though it was kind of up today, okay, they do see the following. Okay, the same thing that I've been saying for the last month, probably, how here we're starting to turn around. We finally have this dark bar right here. Okay, we finally have a dark bar. Is it going to be continued by another one? Probably. Will this ever cross? Maybe. Will this get to negative momentum? Possibly. Okay, it's not a guarantee. It's not a guarantee, but is this gonna hurt? It might hurt. Okay, it might hurt, because the more that we move, the further we see, we've got this negative signal. This might hurt here. This might, a negative signal is not just gonna disappear unless something happens, unless for some reason everybody in Washington has a heart. All of these things start to change. We give everybody UBI for like 4 months into the fourth quarter, and it'll be the best fourth quarter ever in the history of humanity, because the United States decided to give all of its people money for free because they deserve it and they're human beings and life is wonderful, and everybody can get gifts to each other and gifts for grandma, and grandma's okay, and everybody will social distance, and grandma can stay alive through Thanksgiving and Christmas, and it'll snow finally in California because people will not drive as much because they're social distancing, and but that's not going to happen. It's not gonna happen. It's not gonna happen. It's not gonna happen. So we're probably this is probably gonna continue to the downside. Okay, we might have up days. We might have an up week. We may have an up week somewhere in between here. Okay, that could happen. All right, I'm not gonna tell you it's impossible, because it has happened before. Right, and it has happened before at other points in time as well. All right. Back, well, hell, from 2000, where are we here? This is 2000, is this 7? 2017. That's 2017. Okay. We're gonna go here to here, right? Here. If we go to, I want to go to weeks, but 3 years is too little. All right, we're gonna add a time frame. We're gonna customize this list. We're gonna go to our week here. We're gonna edit. We're gonna go max available. Apply. Okay. All right. Now we can do this. Now we can go to week. There we go. Now we can see this thing here over a week's time. Yes. Now we can get into more detail over what happened over at a week at a time during 2007 and running all the way into 2008 and 2009. So here, when we started to get this negative signal, okay, we can even get a positive signal somewhere in between. Okay, it can happen. All right, but from here to here, there's going to be some dead cat bounces here. Okay, there's going to be some periods of time where we may see some increase in price, but there's going to be resistance along the way. It's going to be a very tumultuous period. All right, and depending on if we get in terms of like into the new year and around here, and if no major stimulus comes through, then we might see this. Okay, we might see this other leg down. If we get into next year, so this might happen right here. Okay, this might happen right here. Okay, that right there. I'm gonna go ahead and edit the properties of this one, and I'm gonna show on. Okay, all right, here, 26%. 26% drop on the NASDAQ. Okay, that's pretty significant. Okay, so we go here from the high, 26% puts us here, which is at a point of, it might drop right below basically this level right here. This could be our target. Okay, this might be our target here, basically 9,000. That could be our target. If that could be our low, and it could be the bottom if we don't get any substantial stimulus by the time we get to March, by the time we get to April, May of next year. If we don't have any major stimulus, this could happen. Okay, which case we get basically worst case scenario, and that could be very, very ugly. All right, because what we've seen so far has been we've kind of seen this so far. Okay, we may have a little bit more to go here before we have some major bounce, some major turnaround, where we can jump back a portion of about 20%. Okay, we may be able to see that sort of movement, but there is no guarantee at the moment. Okay, and considering how violent that we're moving now, this could all happen a lot faster than what we're considering the amount of a disruption, economic disruption that coronavirus has been. But that's my prognostication, considering what the weekly chart kind of gives us. On the daily, we are now in negative momentum territory. Okay, every day a down move can become more violent than the up moves. On the 2-hour time scale here, movements to the upside into the oversold are going to be less frequent. What's going to be more frequent now are probably going to be oversolds. The maximum that we kind of get to 70% may not be 70%. Our oversold indicator might be 60% now. That if you go back and you look at the downturn of what happened back in 2007, it kind of flips, right? Because during the entirety of the upside from March, what we saw, this makes any sense, basically, yeah, since March, on the 2-hour, So it might not have been that much of an extremity, but it is harder to see downsides compared to ups, like oversolds compared to overboughts. It's kind of, it outdoes them almost to 2-to-1 scale. Sometimes it doesn't reach completely oversold for it to go back to overbought. That kind of what is a characteristic of a bull trending market. You will see overbought a lot more than you will see oversold. Considering that this could turn into a bear market, what we could see is a lot more oversold compared to overbought. So do not over rely on being able to see an overbought as an entry into a short, or do not fully intend to see an oversold signal and expect to find a subsequent overbought, okay, to be able to sell at overbought. Okay, do not wait for that indicator because it might not come. Okay, the best it can probably happen, considering that we could be in a, when we happen to be in negative momentum, is that it could just move sideways for this to move out of oversold. Okay, it may not get to overbought, it may get to some, it's not going to happen too often. It's not going to happen too often. More than likely you will see oversold conditions. Okay, it's not necessarily guaranteed that you should buy at an oversold condition. Okay, you may get stuck holding the bag way down further. All right, back when I was back here and I was looking at these charts, considering all the momentum is a thing. It's going to keep going for a good long while. We're still in a positive momentum, so considering the outrageous amount of movement here, movement somewhat sideways could be our future here, unless there's more of a substantial downslide. Okay, so this next week or in a couple weeks, or even this week, if we see a substantial slide, it may not matter whether or not that we're in a positive momentum area, because we've swapped, one has swapped over the other. I'm not exactly sure how it's necessarily going to behave. On the 2 hour, what I'm trying to say is, be careful, have your stops. Be careful, have your stops. Be careful, have your stops if you're going long. Be careful, have your stops if you're going short on either side. But yeah, that's basically the video for today. Stay frosty out there, guys. In my opinion, this is probably not over yet. There's still a lot of indicators and stuff that we need to look at to be able to confirm all of these things, but bonds happen to be on the side of this thing moving lower. The dollar's moving up today. It broke through a point of resistance but did not stay above it, so that, you know, there could be some tussle there on the dollar level. But yeah, stay frosty, keep your stops where they need to be, keep them safe, keep where they keep you safe, and yeah, stay healthy, stay safe. Until next time, take care. Bye.